Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. Okay, we talked yesterday about the 50. We talked about the 100. We followed up on that. So the bears took it down there. Let's just go right to the hourly chart. So we went down. They did 42.9375. They did a quick 10-handle bounce, and then the bears started to let go of the rope a little bit. So we talked about this, not every day, but just about every day. There are going to be rallies. In any down tape, there are going to be rallies. And at this point, we've gone from 45, 49.5 down to now 42.93. So, I mean, they've roughly taken about 5% off of it. From the highs. So as we get down here, look, there's going to be bounces. There's going to be bounces. And like I said yesterday, you can be long those bounces. You can stand aside on those bounces. But what you can't do is be short these bounces and say, okay, yeah, it's bouncing, but it's not going to bounce that far. This is a down tape, basically, because you say it is. And this is far enough. I'm going to short it. This is far enough. Well, this is far enough. Come on, this is nuts. This is far enough. That's how you get yourself into trouble. That's how you end up trading against the grain, not being patient with regard to what is a very normal move. They haven't done anything yet. Sure, it's gone up 100 handles from the lows. Okay, it was a great long for us. We didn't buy the lows. We were short the lows from up above. We didn't get involved until around 43.19, 43.20, and we rode that. We took profits, and we're still riding the runners from that. And we'll, when things start to create lower highs and start to take out areas that we find are critical, then we'll take the rest of our trade off and we'll move on to the next trade. But what you don't do is fight it all the way up, or make assumptions about areas that you just think are, well, this is my line in the sand. Well, who says you get to have a line in the sand? Or I get to have a line in the sand? The only determiner is price. So take your opinions in your brain and put it away for a minute and just trade price. Because the other way is going to get you into trouble. You can be long bear market rallies. You can stand aside on bear market rallies, but you cannot be early, short, and fighting them. They will go further, higher, and last longer than people expect. So what do the bears need to do? Well, at some point here, they need to defend something. Okay? You've got the new weekly pivot up here at 44.32, and I'm not saying we're going there. I'm not laying out targets. I'm not going to do my rant on targets today, just to say that if you trade with targets, it's the opposite of smart. And I could do a whole webinar just on that, on the psychology of why people come up with targets. It's because they want to be right. It's not because they want to make money. It's because they want to look smart. And a target doesn't mean anything. A target will make you take money off too soon. It'll make you stay in stuff too long. It'll turn you into a bad trader. You'll be a great analyst, but you'll be a crappy trader. So don't use targets. It's stupid. I did the rant anyway. So you've got things up here like weekly pivot. There's your 9-day. There's the 50-day. For me, the 50-day is what really has to hold. That's what really, really needs to hold on this chart. So I just added the 100 to the chart. It's the yellow line. So, they need to hold the 50. They're going to have to start closing below the 100 if everybody wants the bigger move. Otherwise, it doesn't necessarily mean we're going back to new highs, although we've all seen the bears run that set of plays before. There's plenty up here for the bears to defend. What they need to do, and what they haven't done in times past, is actually defend this stuff. And you'll catch everybody making deals with themselves. All right, well, the 50. Nope. Well, what about weekly pivot? Nope. 9-day? Nope. Monthly pivot? Nope. 20-day? Nope. Oh shit, now what? New highs. And things accelerate. And that's how they end up getting the new highs in a couple few days after doing these moves down. All they need to do is today is try to keep stuff with 43s on it. Stay out of the 44s. Close below hourly mid-band. And in a world where I really want to trade stuff, try to get back to the 100 because the vol on that would be great. Volatility was great yesterday. So the other part we talked about yesterday was how, we had the move in Globex at 3 a.m., which I totally slept through. And we talked about FOMO, focusing on the right stuff, having your brain present and ready to go at 9:30, because the real takeaway from the night before was that there was volatility. Well, I think there was some volatility yesterday during the regular session that we could all trade in the light of day very successfully. So the room had a big day. It's just, when the tape is moving like that, unless you want to fight price, and we never fight price, it's going to give you what you need to make your handles for the day, no matter what happened at 3 o'clock in the morning. But if you're trying to do too much because you're upset about what you missed, then you're going to miss the opportunities that are right in front of you. I could do a webinar on that too. All right, so VWAP is 43.73. Our proprietary moving average is about 87, 5-minute mid, 85 half. They need 95 is where they pulled it back to. So 95 to 75 is going to be a thing. And we'll see how that goes off the open. But where they close between the red line and the yellow line is going to be a big deal. It's going to be a big deal. When that bell rings, the bears need to show up. All right. Have a fantastic day. We'll be out with a midday update. Be safe, be healthy, take care. Join the Facebook group. Join the room. Come trade this stuff. And I will talk to everybody around 1 o'clock this afternoon. All right. Take care. Trade them well.